All right, Carrie, I actually want to hit on one of those stories we just talked about, the idea of 23-hour-a-day trading during the work week. You're somebody who's traded equities. What do you think about that proposal? What do you think it could mean for the market?
I call it a little exhausting. I think, in fact, people do a lot of trading after hours. I think it would be more, I would say, structured, because there perhaps would not be the type of drops that we see after hours when there's not much trading. There's a few shares traded, and then you'll suddenly see big drops, big increases. We might smooth that out if there was sort of more controlled and more organized trading. But, I just don't think it's going to make a big difference at the end of the next day.
All right, well, we're certainly going to talk about it a lot while the SEC considers that. I want to get your word of the day. It's measured. What do you think is going to be measured? Obviously, we have a key economic report coming out before the bell today.
The market feels as if it's accepting that the jobs environment is not very strong, but it's not horribly weak. Inflation has gone up somewhat, but it's not escalating at a rate above 4%. We're seeing that tariffs have had an impact, but not as much as expected in terms of affecting inflation. So the market is having a measured response to what has been going on economically. And it would be great if there would continue through the rest of the year be a measured response in terms of excess. I would say treatment of any announcement about AI spending, data spending, capital expenditures. Let's just see what happens as we go into 2026 in terms of the type of excesses that we have had around AI this year.
All right, speaking of AI, we were looking at this earlier today. You're looking at CoreWeave down, Oracle down, Broadcom down. Also this morning, Wells Fargo out with a note saying that dips become opportunities right now, saying this is a great time to buy the dip, and that weak data is actually the best thing for the markets right now, especially with the Fed's path forward not being that clear. Do you agree with that idea that these are buyable dips? And also, this jobs report that you're saying that the market's accepted is going to be a bit weak is actually good because it might help us get some clarity on the Fed?
I don't think there's any chance that we're going to see moves to the extreme on the Fed. The Fed has lowered rates. Maybe they'll lower once again. We know that sometime in 2026, there'll be a new Fed chair who will not raise rates, or that's what our expectation would be. I'm not sure that buying a dip is ever a bad idea. It's just whether the dip is going to continue. These stocks have had such big moves to the upside. If you look at the chip stocks, they're coming back into reality. There is an appropriate, I think, and healthy sense that, up doesn't go on forever. We have to see if they grow into earnings, whether companies can show restraint about their spending. So the dip is fine. Could it continue somewhat further? Yes, it could. Is it a bad idea to start buying stocks if you haven't owned any of these chips, whether it's Broadcom, NVIDIA? I think add a little bit, but just don't put everything into the basket right away.
All right, well, when we get to your pick, it's in the healthcare sector. You're definitely not buying the dip. You're buying a stock that has surged big time over the last 6 months. Why is Thermo Fisher a good stock to buy right now?
This is a stock we have owned. We bought more of. It has continued recently to do very well. This was one of the darlings of COVID because of vaccines. Their instruments were used in the development of vaccines and in the processing and manufacture of vaccines. So they had an enormous spike, huge drop, and finally, Thermo Fisher is getting its act back together. They had to restructure, refocus, and they're one of the companies that potentially is using AI to identify molecules, to create the types of instruments that use the intelligence and information that we've gathered over decades to design drugs and bring them to market sooner. So it's across the board the type of firm that we use for research, development, clinical impact everywhere. And finally, they're going to see year-over-year gains. So there's more to go for Thermo Fisher. It's been a good stock, but we see healthcare continuing its ascent. Best 3-month record for the group. And this is a name that's one of the best positioned of them all.